Reliance Communication posted its numbers. Margins contracted, revenues at 5,200 crores. We've got the management joining in now, and we've got Mr. Gurdeep Singh, President and CEO of the wireless business, joining in on the phone line. Mr. Singh, thanks very much for being with us. Now, to start off with, let's talk about, the RPMs. They have improved pretty substantially in the first quarter, but the traffic minutes growth was flat. Could you give us a rationale?
Our RPM in this quarter has grown from 44 paisa to 45.7 paisa, which is a 4% growth quarter on quarter. Our efforts on improving the contribution from paid and profitable minutes to our overall minutes consumed on the network continues and is beginning to bear the fruit. Our efforts are on to improve the customer mix and the revenue mix of our customer base, and hence correcting the table of RPM rate per minute to every subscriber, linking it to cost to serve is of the highest priority of the organization. Our non-voice revenue has moved up from 21 to 21.3% to overall revenue, which is the highest in the industry. Let me now turn and give you some data growth statistics. Our data growth has been very promising in the past quarter, and we further continue to consolidate our position as a leading data company. Over 25% of our subscriber base now uses internet, and that stands at 31.1 million users, which have grown by 6% quarter on quarter. 25% of our mobile internet users are now 3G users, and that number stands at 7.7 million versus 7.2 million previous quarters, showing a growth of 7% quarter on quarter. In line with this, our overall data traffic on the network has grown by 14%, which stands at 31 terabits on the network. We continue to have a good quality of mobile internet users on the network, as our average data usage per subscriber is 342 MB.
Mr. Singh, morning. Now, your point is very well taken on the RPM improvement, but why is your wireless traffic growth flat sequentially while your peers have seen a growth of about 2 to 3%? Is it the case of them taking incremental revenues?
No, we are not losing incremental revenue to our peers. As I said, our focus is to improve the paid and the profitable minutes, and our efforts to reduce or eliminate the free and promotional minutes on the network is bearing fruit. I would say the current result of holding the traffic and while improving the yield by 4% is a very dramatic improvement to the performance.
Would it then be fair to say that pricing power is back with the operators? Is there a case for further hikes, as your voice EBITDA has remained stable despite the improvement in RPMs?
Well, the rate increase is a journey, and we said last time also that it will take a couple of more quarters for us to realize the full benefits of all the changes that we are making. Having said that, yes, the hyper-competitive stage is now over in the telecom sector. There is a far more rational behavior. There is far more maturity in the sector, and the pricing power is back to the pan-India scale operators. We do see in the future, should there be any rise in the input cost of the materials, which will certainly get passed on to the consumers. So I think RPM hardening is the way forward, and we should continue to look at increase in RPM on a quarter-on-quarter basis. But this is not a defined, pre-identified event, but this is a journey.
Right. Mr. Singh, let's also focus in on the tie-up with Rel Jio. By when would you be booking the 1,200 crore rupees that you received from Rel Jio? Will this be reflected in the second quarter numbers, or would it be spread over a longer period?
Well, as a part of the agreement, we said that we will continue to make those bookings into our accounts as and when we begin the delivery. Given the confidential nature of the agreement between us and the Jio, without divulging on their rollout plans, I would say that we have started the pre-delivery work. In some cases, the deliveries have already begun on both the optical fiber and the tower side of handover.
Fair enough, but are there any more tie-ups in the pipeline?
As we said, our efforts to deleverage our balance sheet continue. We have said earlier that we are in discussion for a possible stake sale of Globalcom. And the second was a comprehensive arrangement with Jio, which gives us a 1,200 crore upfront in optical fiber and a 12,000 crore over the lifetime period of the tenancy agreement that we have with Jio. These efforts continue, and as and when they conclude, we will be happy to share with you.
Let's also talk about the leverage on the books then. Despite all your best efforts, the net debt to EBITDA currently is at 5.3 times. When do we see this number actually declining a bit, and what's the update on monetization of Globalcom?
I mean, as I said, that we are a free cash flow positive at this point in time as a company, and we continue to be free cash flow positive. Our efforts to deleverage the balance sheets are on, and as and when those deals conclude, they will certainly reflect in lowering the debt to EBITDA ratio, and we'll be happy to share as and when the moment arises.
We're also keen to know what the update is on the realty demerger. When do you think this will be wrapped up by?
Well, as we said, that as we mentioned earlier, that a committee is working on the same, and update will be provided to you at an appropriate time.
There's also, there's a lot of buzz that you've been doing these real estate demerger, etc., and taking up other measures as well for possible sellout. Names like MTL, of course, continue to pop up periodically. Are there any such plans?
I would say that our intense focus is to deleverage and then grow our India business. And increasingly, we will do anything and everything that is required to put more efforts to grow our India business, and particularly the wireless business, that as a segment.
Okay, we'll leave it at that. Thanks very much then for joining in first on ET Now, giving us an update on your numbers. So yes, they will look to hike tariffs if the input costs do inch up. That's a call on RComm's earnings. The stock higher by 0.5%.